Good morning, ma'am, and good morning, classmates. I am Mark Anthony Mejias, the reporter of Chapter 13, the Direct Financing Lease, Lessor. There are two finance lease classification, the Direct Financing Lease and the Sales Type Lease. Direct Financing Lease. The lessor in a direct financing lease is actually engaged in the financing business. Thus, a direct financing lease is an arrangement between a financing entity and a lessee. The income of the lessor is only in the form of interest income. So ang pasabutan niyo guys is that nagpaabang ra kag lease unya ang imo rang i-record ana ang interest income kay ang kanang lease imuha pa man na and wala pa man na nimo gibaligya. And also as stated, no dealer profit is recognized because the fair value and the cost of the asset are equal. The second classification is the sales type lease. This will be reported in the next reporter. But I'll give you a brief description about it. Ang kinasiya, magpaabang ka with the intent to sell it at the end. Accounting consideration. There are four accounting considerations. The gross investment, debt investment in the lease, unearned interest income, and lastly, initial direct cost. Gross investment. This is equal to the gross rentals for the entire lease term plus the absolute amount of the residual value whether guaranteed or unguaranteed. Ang gross investment is equal ni siya sa tanan nimong nabayad sa lease ug ang residual value sa lease. Net investment in the lease. This is equal to the cost of the asset plus any initial direct cost paid by the lessor. Unearned interest income. This is the difference between the gross investment and net investment in the lease. And lastly, the initial direct cost. In a direct financing lease, the initial direct cost paid by the lessor is added to the cost of the asset to get the net investment in the lease. So here's some illustration in the direct financing lease. On January 1, 2020, Lessor Company leased a machinery to another entity with the following details. The cost of machinery is 1,518,650 pesos. Annual rental payable at the end of each year is 500,000. Lease term 4 years. Useful life of machinery 4 years. Implicit interest rate 12%. Present value of annuity of 1 for 4 years at 12%. 3.0373. The initial problem is the determination of the annual rental, which will give the lessor a fair rate of return on the net investment in the lease. The procedure is to divide the net investment in the lease to be recovered from rental by present value factor of an annuity of 1 for a number of periods using a desired rate of return to get the annual rental. Computation. The annual rental is computed by dividing the amount of 1,518,650 pesos by the present value factor 3.0373 of an annuity of 1 for 4 years at 12% or 500,000. So the gross rental or lease receivable 500,000 times 4 years is equal to 2 million. Present value of gross rentals or cost of the machinery is 1,518,650. So deduct it guys and we can have the unearned interest income which is 481,350. The lease receivable is 2 million. Machinery is 1,518,650. Unearned interest income 481,350. The annual collection of the rental is recorded as follows. The cash 500,000, lease receivable 500,000. Table of amortization. The unearned interest income of 481,350 pesos is recognized over the lease term following the effective interest method. Date, payment, interest, principal, and the present value. From January 1, 2020 to December 31, 2023. In January 1, 2020, the present value is 1,518,650 pesos. And the payment in the December 31, 2020 is 500,000 pesos. The payments represents the annual rental. The interest is equal to the preceding present value times the interest rate. Thus, for 2020, 1,518,650 pesos times 12% equals to 182,238 pesos, and you can see that in the interest. Principal is the portion of the rental payment after deducting the interest. Thus, for 2020, 500,000 minus 182,238 pesos equals 317,762 pesos, and you can see that in the table, the principal. And present value is the balance of the present value after deducting the principal payment. Thus, on December 31, 2020, 1,518,650 pesos minus 317,762 pesos equals to 1,200,888 pesos. And you can see that in the present value of the year of December 31, 2020. And so on and so forth until the term is mahuman. Recognition of interest income. The effective interest method is used in recognizing interest income. In the International Financial Reporting Standard 16, paragraph 75, states that the lessor shall recognize finance income over the lease term based on a pattern reflecting a constant periodic rate of return on the lessor's net investment in the lease. In December 31, 2020, unearned interest income is 182,238. The interest income is 182,238. In December 31, 2021, unearned interest income is 144,107. The interest income is 144,107. In direct financing lease with initial direct cost, on January 1, 2020, lessor company lease a machinery to another entity with the following details. Cost of machinery, 1,518,650. Annual rental payable at the end of each year is 500,000. Lease term, 4 years. Use life of machinery, 4 years. Implicit interest rate before initial direct cost, 12%, and the present value of annuity of 1 for 4 years at 12% is 3.0373. On January 1, 2020, Lessor Company paid initial direct cost of 66,300 pesos. The initial direct cost is added to the cost of the machinery to determine the net investment in the lease. Cost of machinery, 1,518,650 pesos. Initial direct cost, 66,300 pesos. And the total net investment in the lease is 1,584,950 pesos. The inclusion of the initial direct cost is in the investment in the lease will have the effect of spreading the initial direct cost over the lease term and reduce the interest income from the finance lease. The gross rental is 2 million and the net investment in the lease is 1,584,950 pesos. Unearned interest income is 415,050 pesos. Consequently, the initial direct cost would decrease implicit interest rate in the lease. The problem therefore is the determination of the reduced implicit interest rate. The original implicit interest rate of 12% cannot be applied anymore because of the added initial direct cost. Computation of the new implicit rate. The new implicit rate is computed by trial and error or through the interpolation process. The new interest rate is definitely lower than 12% and it could be 11%, 10%, or even 9%. The procedure is determine the present value of gross rentals that would equate the net investment in the lease of 1,584,950 pesos using a particular rate. Using 11%, the present value of an ordinary of 1 at 11% for 4 periods is 3.1024. Thus, the present value of gross rentals is equal to 500,000 multiplied by 3.1024 or 1,551,200 pesos. This amount This amount is not the same as the net investment in the lease. The new interest rate is not 11%. Using the 10%, the present value of an ordinary annuity of 1 at 10% for 4 periods is 3.1699. Thus, the present value of gross rentals is equal to 500,000 pesos multiplied by 3.1699 or 1,584,950 pesos. Coincidentally, this amount is the same as the net investment in the lease. In conclusion, the new interest rate is 10%. Accordingly, the reduced interest rate of 10% is used in determining the annual interest income. So here's the journal entries. The machinery initial direct cost 66,300. The cost is 66,300 pesos. The lease receivable is 2 million. Machinery 1,584,950. Unearned interest income is 415,050. The annual collection of the rental is recorded as cash 500,000 pesos. Lease receivable is 500,000 pesos. The unearned interest income of 415,050 pesos is recognized as income over the lease term following the effective interest method of amortization. Table of amortization. The date, payment, interest, principal, and the present value. Payment represents the annual rental. Interest is equal to the preceding present value times the interest rate. Thus, for 2020, 1,584,950 pesos times 10% equals 158,490 pesos. And you can see it in the table above, the interest. Principal is the portion of the rental payment after deducting the interest. And you can see it above too, the answer of 500,000 payments minus the 158,000 interest is equal to 341,505 pesos. The present value is the balance of the preceding value after deducting the principal payment. Thus, on December 31, 2020, 1,584,950 pesos minus 341,505 pesos equals 1,243,445 pesos. And you can see that in the present value on December 31, 2020. And you can see the journal entries here. And the next one is the direct financing lease with residual value. Residual value, guys, also known as the salvage value, is the estimated value of a fixed asset at the end of its lease term or useful life. As a general rule, the longer the useful life or lease period of an asset, the lower its residual value, means magkagamay. On January 1, 2020, Lessor Company leased a machinery to another entity with the following details. Cost of machinery 3,194,410. Residual value 500,000. Useful life and lease term 4 years. Implicit interest rate 10%. The machinery will revert to the lessor at the end of the lease term, which there is neither a transfer of title nor a purchase option. The problem is the determination of the annual rental. The annual rental is payable at the end of each year with the first payment on December 31, 2020. The relevant present value factors are present value of 1 at 10% for 4 periods, 0.6830, present value of an ordinary annuity of 1 at 10% for 4 periods, 3.1699. Cost of machinery, 3,194,410. Present value of residual value, 500,000 times 0.683 is equal to 341,500 pesos. And deduct it, so you will have the net investment to be recovered from rental, 2,852,910 pesos. Divide by the present value of an ordinary annuity of 1 at 10% for 4 periods, 3.1699, and the annual rental is 900,000 pesos. Note that the present value of the residual value is deducted from the cost of the asset if the machinery will revert to the lessor at the end of the lease term. Means, mo balik guys. Or back to. Otherwise, if the machinery will not revert to the lessor at the end of the lease term, the residual value is completely ignored. The gross rentals 900,000 times 4 is equal to 3,600,000. The residual value, whether guaranteed or unguaranteed, is 500,000, and the gross investment is 4,100,000 pesos. Cost of machinery or to net investment 3,194,410 pesos, and the unearned interest income is 905,590 pesos. And here's the table of amortization. Just see the illustration na lang guys ha. Okay, taas-taas na po siya kayo. The next one is the journal entries for 2020. And the accounting problem. The accounting problem is when the fair value of the machinery is 400,000 pesos, which is lower than the residual value of 500,000 pesos. Under the granted scenario, the lessee will pay for the difference. The journal entry of the lessor is cash 100,000 pesos, machinery 400,000, lease receivable 500,000. Under the unguaranteed scenario, the lessor shall recognize a loss for the difference. Loss on finance lease 100,000, machinery 400,000, the lease receivable is 500,000. And here's the other direct financing lease with residual value. The computation of annual rental, check the illustration na lang guys ha, if na may pangutan na minalang ko. The journal entries, the direct financing list, transfer of title to the lease, the table of amortization, and that would be all guys. Thank you.